Well, welcome everybody. John said this is going to take about a half an hour. I wouldn't think that it'd take that long, maybe 20 minutes or so. But it is important that you're all aware of what the updates are that the IRS has for us for this upcoming year. And please note that there's actually going to be a second one of these presentations in January. The reason why I say that is between now and then there can actually be some changes that will be enacted by Congress. We can never tell these types of things. And if nothing else, come January, if you have not heard by then, you can always check with us on our follow-up broadcast as to when the tentative or the actual start date for the tax season. Because right now it hasn't been finalized. Just one of the things that's kind of unique about this year. But we're going to go ahead and take you through what changes we do know about. And so what we'll do is start with federal tax law changes in effect for tax year 2019. We'll also cover additional 1040 related information and correlating schedule changes. The schedules have changed for this year, just like they did last year. They've been updated again. There's a new form. It's the 1040 SR for seniors you should be aware of. The Tax Cut and Job Act reminders. And again, these started last year, but it's important to understand some of the nuances that are in place because of this particular act of Congress. The ITINs and IPT-TINs information. And finally, just for some information in general that you'll need to know before the tax season. So these are going to be the things we're going to cover, and we're going to start with federal tax law changes in effect for 2019. Now, regarding the Affordable Care Act, a penalty for not having health insurance will no longer apply. So the elimination of an individual penalty means the following. First of all, the removal of the health insurance checkbox on Form 1040. Also, the removal of the penalty line on Form 1040 Schedule 2, and the elimination of Form 8965, the health coverage exemption. Now, the other thing that you need to remember, though, is that the ACA still has some things that are in place, specifically as it pertains to states, and also if you're going onto the exchanges themselves to get your insurance, or more specifically, your taxpayer is. So how's this going to look in the form itself, in the 1040 form itself? We're going to go ahead and toggle into this upcoming year's form, and you'll notice when you're going through your client data, do you remember last year where the question was asked, are you have insurance over the course of the year? You'll notice that that's been eliminated. So next year's tax program that comes out from CrossLink, which will come out at the beginning of January, you'll notice that instead it'll be just replaced by something that says, hey, if you did get insurance from the marketplace, you will go through this questionnaire and you'll complete it. So just a quick FYI, please remember there is no penalty, and because of that, some things change. However, at the same time, be cognizant of the state you're in, because the states oftentimes have their own mandates or rules as well. Okay? Let's go back to the slide. And the next thing that we're going to talk about is regarding alimony and divorces finalized in 2019 and beyond. Alimony and separate maintenance payments for divorces finalized after 12/31 of 18 will do the following. First of all, no longer be deductible as an adjustment to income by the payer's spouse. That's the legal designation of the person that's paying out. On top of that, no longer have to be included as income to the receiving spouse, with, again, the legal designation. For alimony payments for divorces finalized prior to 2019, the old rules will still apply. This is the reason that alimony line still exists on Form 1040, Schedule 1, line 18. And if the payer's spouse is claiming a deduction for the alimony paid, the recipient's social security number and the date of the divorce must be entered. So very quickly, we're going to go back into the program real quick. And when I do this, I can go ahead and I can add my forms. And when I do so, if I go to my Schedule 1, you'll notice that there is now a line for alimony payment. And again, that line 18 right here, alimony paid, that will not be for any divorce that was finalized in the beginning of 2019 and beyond. But before that time, that is what that line is for. So it's not for recent divorces, but for ones that happen in arrears. Okay? Back to our slide deck. Next thing that we want to cover is regarding the medical threshold on Schedule A. Please note that the adjusted gross income threshold for medical expenses has been increased this year to 10% from 7.5% from last year. Also, there's a new virtual currency question on Form 1040 Schedule 1. It'll be actually right at the top of the schedule. It's very interesting. It will just simply ask whether or not an individual has received any kind of virtual currency. And the reason why, the IRS added the following question because at any time, and this is the question, at any time during 2019, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency. And the question is to help educate taxpayers on the tax consequences of engaging in virtual currency transactions. Note, one of the consequences is that if a taxpayer uses virtual currency to buy something, the IRS considers this a sale of a capital asset and it must be reported on Schedule D. Additionally, if a taxpayer receives virtual currency, it may be considered income when it is received for compensation for services performed for someone, and therefore must be reported on the taxpayer's income tax return. Okay, very important. And let's go ahead and take a look at this one, if we could. And again, you'll notice on my Schedule 1, right at the top, you're going to see this, and that's what this is pertaining to. So it is important that you do ask your taxpaying client whether or not they have received any kind of compensation or any kind of virtual currency over the course of the year. Okay, the IRS-related information on virtual currencies can be found on the IRS website. And please note, there are two different places you can look: virtual currencies page itself and frequently asked questions on virtual currency transactions. Next up, additional 1040 related information. First of all, the tax year 2019 Form 1040 has actually gone through some changes. It will now print as 2 pages. On top of that, the 2 pages will no longer be able to fit on a single page as it did last year. I think you will remember, if you were using our software, even though there were 2 short pages, you could print it onto one. That will no longer be the case for this upcoming year. Additional changes to the Form 1040 include the following. The capital gain or loss from Schedule D line was moved from Form 1040 page 1 from Schedule 1. On top of that, IRAs, pensions, and annuities are now split out into 2 lines like they were before tax year 2018. Additionally, the signature area was moved to the bottom of page 2. I believe it was at the top of page 2 or at the bottom of page 1 last year. Returned foreign address and third-party designees moved to Form 1040. There was an added line for the total additional income from Schedule 1 and an added line for the total adjustments from Schedule 1. Okay? So those are the changes that and also removed the checkbox for health insurance coverage, which we covered just a couple of minutes ago. Additional changes or correlating schedule changes, as you remember, we had some new schedules last year. We've reduced those numbers, or more specifically, the IRS reduced those numbers. So there'll now be Schedule 1, which is additional income adjustments to income. They removed the capital gain or loss Schedule D line, and added a line for entering the original divorce or separation agreement date for alimony paid and or received. And you remember, we talked about that when it has to do with alimony, that you actually have to put the date that that occurred. On top of that, in Schedule 2, the one that has to do with additional taxes, we consolidated all of the taxes into 2 parts, the old Schedules 2 and 4. So Part 1 will be the alternative minimum tax and excess advanced premium tax credit repayment. And Part 2 will be other taxes such as the SC tax and additional tax on IRS. And finally, Schedule 3, the additional credits and payments, will be a consolidation of credits and other payments into 2 parts. This will be the old Schedules 3 and 5. And Part 1 will be non-refundable credits, and the others will be Part 2, will be other payments and refundable credits. Okay. So again, if I were to toggle into the program very quickly here, one of the things that we're going to see is that here's my Schedule 1. If I were to add forms, now when you get up to this, you only see, of course, your W-2s, all that type of stuff. But in your under the 1040, there's just a Schedule 1, Schedule 2, and Schedule 3, as opposed to last year where there were additional schedules. Next up, introducing 1040-SR. And I'm sure some of you, or if not all of you, have heard about this. The 1040-SR is the U.S. income tax return for seniors. Well, what's it mean? It was mandated by the Tax Cuts and Jobs Act. So one of the things is, oh great, there's a brand new form that's out there, or another way to complete the 1040. Please know that it was mandated because of law. And it's for taxpayers 65 years old or over, and was designed to improve readability for older taxpayers with declining vision. So what's it mean? It's identical. Literally, the first thing you folks will need to know is it's identical to Form 1040, with the exception of having a larger font size and the inclusion of a standard deduction table for taxpayers that are over 65 and or blind. It shares the instructions with the 1040, so those are all the exact same. And the only impact for those who use tax software in which version the 1040 will print from the program itself. I'm going to show you how you can check the box if you have somebody that's over 65 and wants to use this particular program, one of your taxpayers. Please note that taxpayers under 65 will always use the 1040. Those who are over 65 can use the 1040 or the 1040 SR. And how do you access or change the program to an SR? In ours, it's quite simple to do this. One of the things you're going to do is you'll go to the 1040 form itself. Let me go ahead and close this. So I went to the 1040. Right up at the top, the right-hand corner, is 1040 SR indicator. Now, if you click this, this of course will increase the font size when it prints and all the things that we just talked about. Please note that if this is checked and the taxpayer is under 65 years old, it will air during your verification stage. So this is specifically for people that are over 65, and it is not mandated that they use it. It's just a matter that it is an option that is available to them. Okay? So back to the other things that are new for this upcoming year. First, next thing we're going to talk about is Tax Cuts and Jobs Act reminder. First of all, when it comes to child tax credit, the eligible child must have a Social Security number to qualify for child tax credit. This was the same as it was last year. For children with ITINs, they will qualify for credit as other dependents instead. And the credit is $2,000 for each credit, or excuse me, for each child, of which $1,400 is eligible to be refundable. And age qualification remains unchanged, and that means under age 17. With regard to credit for other dependents, which is where children with ITINs are going to fall, it's a $500 non-refundable credit for children that are 17, 18, or a student, as well as other qualifying dependents. With regard to exemptions, also something to remember, they are no longer applicable. Continual reminders, the standard deduction. Standard deduction, and of course this started last year, the standard deduction increased substantially. And really what we find out of that, a vast, vast majority of taxpayers are now taking standard deductions. What are the numbers for this upcoming year? They are as follows. $12,200 for single individuals, $24,400 for married filing jointly, and $18,350 per head of household. I believe there was a slight increase in each one of these due to inflation from over what they were last year. Additional standard deduction for aged and blind remains the same, which is $1,300 for married filing jointly, or $1,650 for unmarried. Okay? When it comes to Schedule A, the tax deduction, please note that the total state and local income tax and real estate taxes are limited to $10,000. So when you take a look at this, why is it that so many people are taking standard deductions? It's pretty obvious when you take a look at what a standard deduction starts, and the most that you're going to be able to deduct from your Schedule A is $10,000. Standard deductions make more and more sense. When it comes to Form 2106, please note the form is no longer allowed to report business expenses on Schedule A since the miscellaneous itemized deductions being subject to 2% of AGI have been suspended. Only applicable for certain business expenses of reservists, performing artists, and fee-based government employees. When it comes to moving expenses, the Form 3903, please remember only members of the military are allowed to deduct moving expenses as an adjustment to income. And when it comes to entertainment expenses, taxpayer can no longer take a deduction for entertainment expenses or membership dues that are for any club organized for business, pleasure, recreation, or other social purposes. And this applies to Schedule C, Form 2106, as well as other business form types, the 1120, which is corporate, the 1065 partnership, as well as the 1120F, which is the S Corps. Next up, ITINs and IP pins. A couple of things of note. The expiration of ITINs. At the end of 2019, the following ITINs will expire, and they must be renewed if an individual wants to use one of them on a 2019 federal return. ITINs with the middle digits of 83, 84, 85, 86, or 87, as well as ITINs that have not been used at least once in the last 3 consecutive years. Okay? When it comes to IPINs, which is, these are the 6-digit numbers that the IRS assigns individuals who have been victims of identity theft. A couple things of note. The IRS is expanding the use of the IP PIN, and residents in the following states may request one of the tax year 2019, and they are in Michigan, California, Maryland, Nevada, Delaware, Illinois, Rhode Island, Arizona, Colorado, Connecticut, New Jersey, New Mexico, New York, North Carolina, Pennsylvania, Texas, and Washington. You see the list right there. I rattled it off, but just take a moment and take a look at that. Okay? Taxpayer spouse can receive one of these, and if they have one, they must enter it or the return will reject. And finally, if they lose it, they can retrieve it by using Get an IP PIN tool on the IRS website. And I'm sure all of you have looked at the IRS website. There's a plethora of information that's available. This is a perfect example. This is where you would retrieve something if you have lost an IP PIN. Okay, we want to finish up with some information. Reminders regarding prepared due diligence. Very important to note that the Form 8867, which is the Paid Preparers Due Diligence Checklist, has the following. It applies to head of household filing status. On top of that, it applies to credit for other dependents and applies to earned income tax credit. It also applies to child tax credit, which includes the additional child tax credit, and applies to the American Opportunity Education Credit. So as you can see, there's even more scrutiny on the preparer to make sure that he or she has gone through the due diligence of checking the information with the taxpayer. The $520 penalty for failure to comply is with each credit. So it can be for EITC, child tax credit, AOTC, and head of house filing status. So why do I mention that? It's important to understand that the potential penalty is on each return. So if you were out of compliance with regard to all of these on a single return, your actual potential penalty for one return could be up to $2,080. So again, remember, it's $520 every time you are found, should you be audited, and it is found that you're not compliant with regard to doing your paid preparers due diligence checklist. And it has to do with all of these different areas, not just some of them. And you have to be diligent, you have to do your due diligence and check them in the return themselves. Now, regarding qualified business income deductions. First of all, qualified business income for 2019, an individual may be able to deduct 20% of the domestic qualified business income from partnership, S-corps, as well as sole proprietorships. Qualified business income is net income from Schedule C, Partnership K1, Subchapter S K1, and possibly rental income reported on a Schedule E. For the vast majority of taxpayers, over 90%, this deduction is calculated as the lesser of the following: 20% of their qualified business income or 20% of their taxable excluding any kind of capital gains. What's new for 2019 is the Form 8995, which is the Qualified Business Income Simplified Calculation, and has been added to show the calculation of this deduction for most taxpayers. Continuing on with regard to qualified business income deductions, for the remaining 10% or so of taxpayers whose income exceeds $157,500 or $315,000 for joint filers, the deduction is limited to as follows. First of all, for specified service businesses, the deduction begins to be phased out once the income limit has been reached. On top of that, for all other businesses, the deduction is limited to 50% of the W-2 wages paid by the business or 25% of the W-2 wages paid by the business plus 2.5% of the unadjusted basis for all qualified property. Now, what's new for 2019 is Form 8995A, which is the qualified income deduction, has been added for those taxpayers that are over the income limit to calculate the deduction. There's also the following schedules associated with Form 8995A. They are the Schedule A, which is specified service trades or businesses, Schedule B, aggregation of business operations, Schedule C, loss netting and carry forward, and finally Schedule D, special rules for patrons of agricultural or horticultural cooperatives. Now, regarding rental activity and qualified business income, please note this is a safe harbor rule for when rental real estate can be treated as a qualified business income. So what does this mean? The IRS issued a proposed revenue procedure in early 2019 that states the requirements for when rental activity can qualify as a qualified business income deduction. Now, what is it? Rental activity must meet all of the following. Please remember, it's all of these. First of all, maintain separate books and records for rental activity. The taxpayer must perform 250 or more hours of rental services, must maintain records regarding the following: hours and a description of all services that have been performed, dates on which such services were performed, and who performed the services. Taxpayers must attach a signed statement to the return attesting that the rental activity meets all of the above requirements. This is kind of important. They're actually asking for quite a bit of information when you want to use rental properties as part of your QBI deductions. Okay, so finally, I want to finish up with a little bit of where you can find additional information. And then we'll turn it back over to see if there are any questions on the things that we've covered. Always remember CrossLinkTax.com is a great source for information. It's continually being updated, and because of Mark's connection with the IRS and the different groups that he belongs with, business groups, he really does have a good pulse on the things that are changing, and because of that, please take a look at our Tax Resource Center. Some of the helpful continuing updated information that's located concludes the following: pay, prepare, due diligence, things to know for the current year, tax updates, and even Tax Cuts and Jobs Act. Because, some of these things do change ever so slightly, even if it's the amount of standard deductions from one year to the next, whatever it might be. You can always find that information in our Tax Resource Center. Additionally, when it comes to the Tax Cuts and Jobs Act, there is additional information that's found in IRS publications. And there are two that are very important. Publication 5307, which is Tax Reform Basics for Individuals and Families. And finally, publication 5318, which is Tax Reform for What's New for Your Business. That literally brings us to the end of my particular presentation. What I'd like to do at this time is turn it over to John to see if there are any questions that you might have, and which this is why we have Mark available to us to go ahead and give us more insight on any of the questions you might have. So with that, John?
Thank you, Steve. So as you were going through the different types of income, Steve, and this may be, I think this is a question for Mark, but where would somebody go ahead and list household help income?
The return itself?
That would be my interpretation of the question as it was asked. Yes, on the return itself.
So I would go and read the 1040 instructions, give you where that should go on the form, and it could be part of the wage line, or it could be on another line for other income. So I would go, the 1040 instructions has detailed information on that. So I would go ahead and read that in the other income item, and also on the W-2 wages line has information on that.
Okay. Earlier, Steve, you were talking about business deductions or expenses, entertainment expenses, and the fact that they were kind of deduct for profit. One of the questions that came up was, will Chamber of Commerce memberships be considered entertainment, even though those are typically for business leads?
Great question. Mark, you have a take on that one? Chamber of Commerce as opposed to club memberships?
I don't know the answer to that. I mean, it probably would be deductible, but again, you have to look on and see. I don't think that actually qualifies as entertainment, but again, you need to do some research to see, just to be absolutely certain to go through on that type of a question.
Okay. What type of businesses at a high level qualify for QBI?
Any business that's any activity that you're in to make a profit, basically, that qualifies as a business. So anything you're reporting on the sole proprietorship on Schedule C, anything that you're doing, getting if you have a partnership and you're getting that information from your K1 or from 1120S. Again, the rentals, depending if you meet the qualifications, but basically anything you do as a Schedule C, that's usually considered a business and would qualify for the QBI.
Okay. Steve, you had shown some states in relation to the IP PIN. So the question that's come up is, can they simply request, if they're in one of those states, can they simply request an IP PIN from the IRS to prevent fraud? And I believe the answer to that is yes. I'll verify with you, Mark.
Yeah, that would be those states. You would be able to go to the IRS website on Get IP PIN or the IP PIN website webpage on the IRS website, and they will give you more information. There will be a publication coming out in the near future that helps explain that. But once you go on to the Get IP PIN site, then you need to go through the verification, the secure access to verify who you are, and then the IRS will have instructions of how to do that. So they'll have more instructions to come on the IRS website on the IP PIN page, and then there'll be a publication coming out. When that comes out, I will do a tax update so people know where that's at. But again, so that's where the information will be.
Okay, excellent, Mark. Thank you. And as a reminder, the tax updates Mark's talking about is we provide those to you across 3 different mediums, depending on what the update is and the impact of the update, which are emails that will go out, so you can register for those from our website. You can also, as Steve mentioned, go to crosslinktax.com and then visit our tax resource center. They'll all be posted there. And then additionally, on the social media sites you see listed on your page, in particular, the Facebook page and the Twitter page, we will post tax updates as we go through the season as well. Mark, back to the entertainment expenses, the deductions. The question becomes, and I think the answer to this is it's no longer deductible, but I will verify with you, which is country club membership that is used to host clients, meetings, etc. Would that still be deductible?
No, that would not be deductible.
Okay. So that's a change for some of our customers.
Well, actually, that started last year, 2018 and beyond. Anything that deals with entertainment and has specifically that type of expense is no longer deductible.
Right. Okay. And then one of the questions that's come up here, hobby income. Are there any updates this year for hobby income?
Same rules apply that have always applied to hobby activities. Okay. So you have to go to the IRS website. In the publication instructions would explain when something qualifies as a hobby instead of a business, when you're reporting on the Schedule C or that type of thing. So no, the rules have not changed as far as I know.
Okay, wonderful. Several of you have asked in regards to when CrossLink will be available for this year. Depends on your product, but I can tell you that if your product is either CrossLink 1040 desktop or CrossLink online, that those products will be available mid next week. And when those are available, we will go ahead and send an email notification out to you, as well as post to our social media accounts. Once again, you can see them on our screen at this time, notifying you that the software is either available to log in if you're an online product or download if you're a CrossLink desktop. Okay. Then the last thing, as we wrap up here, we're got a little past the half hour we mentioned. Steve, thank you very much for taking us through the presentation. Mark, thank you very much.
Great questions. Great questions by everyone. Those are very good. Excellent.
Excellent questions today. And Mark, thank you very much for answering those questions. As our expert, one of the values you get with CrossLink is that we actually do have a government liaison who has access to this information. And if you are not familiar with the CrossLink Tax Resource Center on our website, I do highly recommend you take a look. There is a ton of information there that is extremely important for you as a professional tax preparer. With that, thank you very much for your time, and this concludes today's webinar.